Hello, everyone, and welcome to the best session of the day. I'm sure you can all agree. And while the others were good earlier on today, this one is going to well and truly smash it out the park. Sadly, most of us aren't allowed to go to parks. Hopefully one day we'll be out in the parks. So we have three founders that have gone through many twists and turns on their journey. Two of them have pivoted their business models and at one point or another, and they've all seen lean times, but they remain defiant in the current climate. So first up, I'd like to introduce Prajit, the founder of NIUM, formerly known as Instagram. So one of Asia's most charismatic founders. He set up NIUM in 2014 and has raised over 60 million from marquee investors. His clients include 4 of the top 10 banks in Southeast Asia. And a fun fact about Prajit is that as a child, he wanted to be an astronaut, but sadly, the closest he got to being in outer space was meeting Prodigy, which is quite a good claim to fame. And next up, we have Russel from Paidy, a man who knows how to build a business. He's got battle scars to prove it as well. And so from building Paidy, or the first iteration of Paidy during the financial crisis in 2008, he's raised over 200 million along this journey, striking strong partnerships with Amazon and other e-commerce players. And the saddest thing, and he's probably not going to like me for saying this, but the saddest thing about Russell is, as a child, his dream was to build a business in financial services.
Right.
You've achieved your dream now, Russell. So what's left for you?
My dream was exactly this session, Pat.
Fantastic.
Like, this is it. It's all led to this moment.
Right. It's all downhill from here then, basically.
Yeah, right. Well, thank you. Anyway, cheers.
No worries. And lastly, we have Paul Chapman from Moneytree.
Hi.
Having sold his first business to Thomson Reuters, he set up Moneytree and has also pivoted, taking his business from a B2C model to B2B to essentially take advantage of the waves of open banking. Running a business in Japan, as Russell can attest, is certainly not easy. But you've managed to secure funding from Salesforce, which is super impressive, and also a number of Japanese banks who are also your customers. So you've done pretty well. It certainly does. So to the audience out there, if you're not excited about the next 30 minutes, you clearly aren't in fintech. So I want to get the show on the road. And I'd like to start with a day in the life. So Prajit, last time we spoke, it was on a work-related Zoom call, and your beautiful daughter, Erika, came in and just gracefully sat herself on your lap. So kind of, I want to pick up on that, because what does your day look like now? And importantly, how do you keep the energy levels up?
Thanks, Pat. I think it's a super interesting question, right? Is there a day anymore? Is there like a 24-hour day? Because the day starts basically getting in front of the computer and it keeps on going on. Honestly, I'm missing office because you have like scheduled time when you get in and when you get out and stuff like that. Here, the day never stops. So for us, we've got teams from Australia to Seattle. So as you can imagine, that there's somebody always online to have a conversation with you. So super tough. I think the benefit of being working from home is you reconnect with family. I think I've spent more time with my 17-month-old now than I actually did in the last 15 months. So I think that's great. But somebody like me who feeds off with on people's energy around me, etc., it's a massive challenge. So I see that as a big, significant change. I also worry right now as a founder, it's been great because a lot of productivity increases are something which we're seeing. But as a founder, I'm also worried because this can really have a mental imbalance role longer term, because a lot of people like to go out, meet people, and suddenly they are confined to their desks and laptops, and and there is only an amount of Netflix movies you can see, right? So a longer term, I'm not really sure this is a great thing, but shorter term, yes, higher productivity, reconnecting with families. I think I found my chi as well, just relaxing and having time and space to think about the right things.
Cool. And Paul, I'm sure you can relate too, but your kids are slightly older. I remember you saying that you play tag with them in the mornings, which sounds like a lot of fun.
Tag translated to Japanese is chase the demon.
Oh, wow.
So, or playing the demon. So we go in the mornings to the park. It started a little while back, and my wife, I think the right word is goaded me into coming. And I was like, I'm spending a whole week indoors. I have to get out. And so it is a really good way to get about 30 minutes of exercise in the morning. We don't let them touch the play equipment. As soon as too many other people come to the park, we're like, let's get out of here. But keeping, as Prajit mentioned, mental health, physical health, they're intertwined, and you have to look after both of them. So, keeping energy levels up is a really important thing to do. One of the things that we're doing within our team, and I cannot take the credit for it, someone who recently joined the team came up with this idea. We have a Slack channel called the COVID-19 Social Club. And it's during the day, of course, people can chat there. At lunchtime, people hang out. There's a Google Hangout that just is always running there, and people are constantly monitoring the channel. It's mostly for people without families and some who maybe are sick of their families after being stuck inside with them for 3 months. We're at the 6-week mark at the moment, but no, it works really well because people who haven't got that personal contact can then start talking to anyone who's on the chat. At nighttime, people cook together. They play online games together. It helps pass the time and keep people connected. At the same time, people from different levels of the organization take part. We have senior people dropping in there every now and then. And so I think it really breaks down some barriers. For us, some of the senior leadership team at Moneytree have been saying, do we need an office? And we just leased our second office. So I'd say yes for a little while longer, but hopefully we'll get to use that soon.
Yeah, no, that's certainly an interesting point, certainly around well-being and physical space as well. So when we come out of this, and we'll come on to that a bit later, do we need these large offices where everyone congregates? But just to pick up on your point and to move on to Russell, can you share more about how you communicate with your teams? And the other day we were talking about brainstorming, and have you managed to crack the art of brainstorming on Zoom, or is that just going to be a futile quest?
Yeah, this is for me, is it? Yeah,
it certainly is.
Yeah, it's funny. I don't know, like to Paul's point, I think like it's interesting, right? Like the other big one is business travel. Like to kind of go back to this thing about date. Like I now spend a lot of time just speaking with bigger customers, whatever, or different stakeholders. And actually you kind of realize that you can do that fairly effectively without, it's not as fun as like whatever traveling and going to dinner and stuff, but obviously, it'll be interesting to see if that comes back after, in the same way as like, do you need as much space, right? So like, I think the earlier observation that Pat's referring to is, we now do a lot of stuff that's all hands for the company. And actually people like remote all hands better than physical all hands. So we have like 150 people. So actually like the extent to which they feel that they're interacting with you as a leader or what, I think it's quite different if you're just viewing it like this, right? Versus just being one in a room, and maybe people are more open to asking questions if it's on chat, whatever. So I think that's been super effective. And then, obviously the one-on-one is fairly effective. Like, again, it may be easier, but to your point, Prajit, like I think we've seen similar productivity stuff where if people know what they need to do, like they can just go away and execute and do it. But actually this other one where it's kind of like half a dozen people and you really want to choose something over and whiteboard it and, kind of do this whole thing where you pace in the room and, give me the pen and you do that. I don't think that works as well, actually. Cool. And I think it's one of those things where, and I, obviously everyone else's experience may change, but, yeah. So to answer your question, but no, I don't think we've, in the intervening 24 hours since we spoke in advance of this call, we haven't licked it yet. But it's interesting to see these different modes of interacting with folks and how you organize people. And like, I think for sure, to your point, Paul, like we will always run all of our all hands remotely, even if everyone is sitting at their own desk in the office. Like that somehow there's something that's actually quite a bit better. I don't think conferences are going to all be like this, but presumably there are folks that are watching this now that are getting a different feel and a different kind of bandwidth about an understanding of us than they would if they were at the back of a place, in a traditional socially close conference rather than a socially distanced context. So anyway, there you go, Pat. Go ahead. Sorry.
Well, it's nice to hear a positive story around working from home. So that's pretty cool too. And have you guys, Paul or Prajit, have you managed to crack the art of brainstorming via Zoom or remotely, or is this going to be a futile quest too?
Sorry, I need that. So I think we haven't done it. Like we basically, I don't think I agree with what Russell's saying. Creative brainstorming, and as I said, like somebody like me feeds off other people's energy, and that gives you new concepts and ideas.
Yeah.
But to be honest, I think one big positive I've seen for myself is when you're in office, you can't cut yourself out because people will come have a chat with you. Here, there are a lot of time you actually spend, reflecting, thinking. And I think that's been super productive for me. In fact, I personally think that I've come out with the best idea I have in the last 5 years, in the last 2 months. We've not implemented it. I want to implement it and then basically beat my chest saying that came because I was just abstract thinking. So there are pros and cons, but
Right.
I think one thing which is the biggest pro is, do we really need offices? So we were actually about to sign a big lease in India to create a 500 people office space. We've stalled that. We have a 150, 175 people space. Why don't we move on to the rotational basis? Let's try it out. Like, this works. And if we can reduce our cost, why not?
Yeah.
A one-man brainstorm.
Give me that. No, give it to me.
Maybe I'll learn writing with both my hands, saying that left side of the brain and the right
Well,
side.
there you go. Hilarious.
Yeah, there are a lot of tools to help you with remote brainstorming, and we're yet to really, aside from the obvious ones like on real-time chats, Slack, G Suite, or real-time document collaboration, Zoom or Blue Jeans or Hangouts, whichever you use. But one thing that really worked for me was a $100 whiteboard. I've got it over here. You can probably just see it there. In fact, I bought it for my kids, and so every now and then I've got to fight them for it. They're like, "No, Daddy, I want to draw on it." I'm like, "Before work, darling." And having an external webcam means I can put it on there, and at least there's no fighting over the pen because only I can control it. But that being said, we're about to start some client workshops, and this is an aspect because we work with some of the largest and smallest banks in Japan, and most of them were very reluctant to use video conferencing. Some of them have recently said they don't want to use Zoom for security reasons. We've assessed that and no, we're happy to keep using Zoom, but there's a variety of things you can use. So what we haven't been able to do until now is to get them all to say, "Yep, we'll do a video conference, no worries." So we've had people, even in the early days of the pandemic. So we went all remote middle of February, and the only teams that had real trouble were the client-facing teams. But by mid-March, we convinced them to really tell all the clients, "Look, we really don't want to meet with you in person." And for about a week, there was a group of clients that were like, "Well, we can't meet you then." And then a week later, they're like, "Okay, the lockdown's been called. We can meet you on video conferencing." So it has helped us. I mean, in the same way that the UK NHS people have said that there's been 10 years of innovation in a week. I'd say that it won't be as quick in the Japanese financial sector, but we are seeing rapid uptake of different tools, different approaches. It's a little bit of a train car effect where it takes some time for one train car to bump into the other and for that to reach the end of the train, but it is changing. And so for us, we're finding that that's a refreshing development despite the obviously difficult times we're in.
No, that's really good to hear. And you mentioned, Paul, around kind of customers and sales, and some of the things that we're noticing at MAS when we speak to some of the founders in Singapore is the challenge around staying close to customers or staying close to existing customers and trying to attract new customers. And we've got obviously the B2B perspective here and a B2C perspective, and it would be good, Paul, if you could just share a little bit more about how are you kind of overcoming that challenge in staying close to existing customers and ideally attracting new ones as well?
So like most platforms, we do have a customer success team. They're responsible primarily for keeping in touch with the existing customer base. We have seen slowdowns in assessment of new deals simply because people aren't in the office and they can't get to the stamps. I'm hoping that's not the only reason, but that is part of the reason. But in terms of being able to keep it real and continue with sales, it is definitely a challenge. Because we have a pipeline with companies that we've been in discussions with for a long time, because we're primarily an enterprise company these days, what we're doing is we're doing online workshops. And so we're just about to start those, and I can let you know how they go. But for those online workshops, we're doing a lot of research as to how those are best run. And it's new to the clients themselves. They've never done an online workshop. They may have never done a workshop with a vendor to date, because some of them are very, very traditional or conservative. So for us, it's really about having the courage, I suppose, to challenge them and say, please try this new approach. Just trust us. Let's see what happens. And as I mentioned before, more than ever before, they're willing to sort of take that leap rather than say, no, we really can't do a video conference or a workshop online. We're also looking at shifting a lot of our marketing activities, because we've like most fintech companies, we've been depending a lot on face-to-face conferences and events. And they could be all gone for the next 6 months. We don't know. So we are shifting to focus on webinars, and even finding out about Hopin.2 is like a real boon, thanks to the conference, the quarantine summit that we're in today. So I think it's about being able to have that conversation with customers or potential prospective customers, and at the same time teach them about these new tools and new approaches, and then get them to be productive in the digital space.
So it's an education process that certainly makes sense, and I think so certainly Prajit and Russel, you have the B2C aspect of your businesses as well, and so it'd be good to kind of understand. Clearly marketing costs on the B2C side have probably gone down. So how is the sales effort kind of, how are you reinventing yourself if you need to reach your customers and ideally reach new customers as well? Maybe if we can start with you, Prajit.
Sure. I think what COVID-19 has also done is change the landscape significantly, because as you rightly said, everyone out there is saying, hey, cut your marketing budget significantly, right? But we've seen a big change in buyer behavior. Consumer behavior changing is a massive thing. So people have spent millions of dollars to change consumer behavior, and it's never happened. So specific to our field, I can tell you that on the consumer remittance side, the domestic help or foreign worker or construction worker loves to go queuing up in a line, sending money, etc. Now he can't. So those things being digital. A lot of brands have spent millions of dollars trying to get these guys online, and it never really worked out. So this is a big, massive change, and I think this is a strong change, because this will only lead to era of cashless economy, digitization, things like that. So for years we've been hearing about things branchless banking, but in reality, branchless banking will become true now, because for a change, you're arm twisted to do it. I think that's an interesting element which is seeing. Because we are hybrid, we do B2C and B2B. Funnily enough, I started this year taking a 9-hour flight to go and meet a bank for 6 hours, where I was just there to sign a document, right? They just wanted to. I said, can I send you a courier? They said, no, we want to meet you. The retailer wants to meet you, and we actually did that. That is changing, as Paul was saying, that's moving more offline. People are ready to meet you on a video conference. There are people who are ready to have a chat with you. We're seeing a big uptick on the B2B side as well, where the mindsets are changing, saying that, I'm okay to not, like in Asia, like where we function, unless you give him a nice firm handshake, business don't happen, right? But that is changing, where people are saying that, hey, we are open to doing remote things as well.
So we're going to come on to forced behavioural changes, I suppose, and some of the use cases. So I think that would be interesting to kind of delve into. But it'd be good to get Russel. Your business is distinctly different as well from Paul's and Prajit's. And is there any insight you can share, and maybe some of the data and insight that you guys probably sit on about consumers?
Yeah, so I think for us, so just to give some clarification to folks, so we run a payment method. I wouldn't say payment server, payment method called Paidy. So basically, without signing up or downloading anything, people can shop at 500,000 websites in Japan. You just put in your email address and phone number. We instantly underwrite against those, and we basically give you what is functionally like a credit card. So it's a monthly consolidated bill. You can turn it into installments if you want to. You can do recurring billing, subscriptions, digital content, all these good things. And really what we're doing is we've replaced the credit card number and preloading friction with your phone number, right? Everybody knows their phone number. Now, there's some other different sort of neat stuff that we can do with consumers afterwards. But the whole value proposition for us is, when you look at e-commerce in Japan, the credit card penetration in Japan is quite high. It's 3.2 cards per person, but nearly half of e-commerce in Japan is still on a cash settlement method. So even though it's the world's third largest economy, very, very big, it looks more like a developing country in terms of digital payments behavior than a developed one, right? So what we're doing very specifically is saying, okay, why are people using cash on delivery, or convenience store payment or bank transfer, some cash payment method 45% of the time when they're shopping online? It's basically because it's easy at checkout, right? I don't need to put in a card. I don't need to feel I'm exposing any risk. I don't need to, whatever. I don't need to reach into my purse to get my wallet, to get my card, right? That's like, but every moment thereafter, actually, cash on delivery is really painful. I have to wait at home for each transaction. I have to interact with a delivery person. I have to handle cash and give it to them, right? It doesn't work for subscriptions. There are no refunds, all of that stuff. So like our whole product philosophy was, let's attack the cash market for online sales and deliver basically all of the ease of use at the front end, but all of the value of a card throughout the customer journey. So you can imagine for us now, what we're seeing is primarily our use case is online, right? So a lot of our underwriting is looking at online behavior, alternative data, all of that, as you would imagine, right? The same way any of you would run the business if you were running it. And for us, the fascinating thing that we're seeing now is actually, convincing people why something like Paidy is better than cash on delivery used to be about, okay, well, you don't need to wait at home for the delivery guy. Well, everybody's at home, so they don't mind about waiting at home. But actually, the aspects of our service that are actually quite well suited to the current environment are, it's a socially distant payment method. So actually, I don't need to physically give cash to a person that I interact with. Now, I'm sure that person is fine, but people are just aware of cutting down these interactions. So that helps. Second one is people are buying much more online, right? We all are, because we're all home. We're buying things. Like I would have gone to make a quick purchase. You run out of whatever, dishwashing soap. I don't know, choose whatever daily essential you want to choose. You run out of dishwashing soap, and you would go to the local store. Maybe you wouldn't do that. Maybe you just order it because you have Amazon Prime and it's going to come to you tomorrow anyway. So it's the same thing, right? So people are making more purchases more frequently for smaller amounts, right? Like all the big ticket stuff, maybe they're a little bit worried about. So the neat thing that we're seeing is actually in the context of making multiple smaller purchases, if you were traditionally a person that would have done cash on delivery or some other cash settlement method, the utility of something like Paidy is really clear because it's a single monthly bill that you pay. So if I'm now consolidating not 3 purchases, but 30, the utility is just abundantly clear. And instead of having to have 30 interactions with a delivery person taking cash out of my wallet and giving it to them, I'm now just sort of collecting it from my mailbox or whatever. So I think that's interesting. And if I think everybody here is having this experience where there are people who will have a higher propensity to use your service, right? As Prajit says, they can't line up at Western Union anymore. So actually getting them to make that jump into some of the products that you support is going to be real. And hopefully they never go back. I mean, no offense to Western Union, but like if we all have these opportunities to try and really demonstrate value in times where we have a unique role to play. And if you do that well, hopefully you've started this more extended journey with your customers, right? I think that's I'm sure that's how everybody on this conference is thinking about the current time. But that's what we've seen, Pat. So people are shopping online more frequently. I think there's less of a for cash consumers, maybe marginally less excited about interacting with a delivery guy. And then the purchases that they're making are obviously smaller and more frequent. So the value of having a payment method that still lets them settle in cash, but settle only once a month, next month, is kind of demonstrating its utility to a segment of people that are now home and shopping much more.
And do you see this trend here to stay for the long term?
Yeah, I hope so. I mean, I think all of us would say, yeah, I mean, I can't imagine why you would go back. If something like, I don't think that people naturally derive pleasure and utility from lining up to make a physical remittance home. They just do it because it's what they've always done, right?
It's a learned behavior.
Yeah, so I think that once you have an opportunity to demonstrate that it's like the previous session, right? Like once you have an ability to create new habits, like this is a golden opportunity for all of us, despite what it may feel like, new behaviors are going to come out of this. And look, part of it is also going to be old behaviors, right? Ev Williams is super famous for saying, the way you make money on the internet is take something that people are already doing and remove a step, right? So like for you, Prajit, same story. People are already doing remittance. Just remove the step of lining up. Lining up sucks. So whatever that equivalent is for all of us, right? Or, you know, anybody that's watching this, like now is the time where, you know, again, to Prajit's previous point, like in these quiet moments of reflection and inspiration, where are the other bits of friction, or in Japanese we say mendokusai, like where is it, you know, our corporate mission is attack mendokusai. So like where are the other bits of mendokusai in whatever your end-to-end consumer experience, or even their day, their life, like there's going to be new behaviors, new burdensome things that maybe weren't a burden before. Sorry, I know this is a long answer, but like, you know, interacting with a delivery guy wasn't a burden. Now it kind of is. You sort of think, well, you know, this guy's taking money from 100 people today on his route as he's going around delivering his package. Maybe I don't need to be 101, right?
Exactly.
In the old context, you didn't care. Who cares? Give me my package. Here's the money, you know? So these things will change for sure.
Russell, I was on a call with 3 bankers the other day, and they're all agreeing vigorously that they don't want to touch cash. And I'm thinking, a bank that doesn't touch cash is a world's first.
Right.
Yeah.
So Paul, just to pick up on that point, I was going to say that, you know, just to your point, Russell, that having no contact with people for the last week or so, I kind of like just a little bit of interaction with my local coffee shop where I'm getting my coffee from outside. Just that few minutes conversation. It's a little bit repetitive these days, but I try and kind of make it a bit more enjoyable and fun. But just to pick up on, and I'm not sure I'm going to pronounce this correctly, mendokusai, Paul, what does that mean to you in the current climate, and where are you attacking? Where are you seeing use cases that could benefit your business?
So as part of our business continuity planning at Moneytree, aside from fundraising, and we're going to be announcing the closing of a new lead on our Series C round at the moment, but I can't give it to you today.
Congratulations.
Thank you. Not as big as Russell's congratulations, but big for us. So we're pretty happy. Like I say,
it's all relative.
Yeah. But no, for us, we're looking to see, you know, how can we provide more value to our customers? So the majority of our enterprise customers are banks, and so they've been known for having a very low level of churn. However, the truth is some of them might churn, and when people churn, it's because they're not getting the value from a service. And for us, the value of the services we provide, because we provide a data platform that gives banks access to consensual data from their customers, so they can provide new services, they can do lending and so on. If we're not giving the bank's customers enough value, or in that interaction with the customer, that's where we'll miss out. So we're asking the question, what can we do to provide more value? Now, what we're seeing in the US, we think will come to Japan and the rest of Asia to some extent in the future, which is a huge number of SMBs, so small to medium businesses that are facing bankruptcy. They're running out of cash. They can't operate restaurants, hospitality. Basically, anything retail is going through, I guess, not more than a crisis, an apocalypse right now. So that means lots of loan applications. And in Japan, it's a lot of paper. I've done a bunch of loan applications at Moneytree in my time. And it is always a stamping ceremony. And please write your name again. You didn't quite do it quite right. So how can we take a lot of that friction out? How can we take out steps? How can we make a 30 or 60 day lead time for a loan into 3 or 6 days? And so luckily we have a lot of close relationships with banks. We're beginning to ask that question, like, what can we do for you? Already, you know, we've looked at some of the loans as well that are out there, because we've got more than enough this out, but we could always have more. So we are looking at loans, and the person from the bank is telling us, look, I've got 100 other companies that are about to go out of business. You come after them. And I'm thinking he's just got this pile of paper and he's stamping away and trying to get stuff done. And at some point, the banks and the government will realize that we need to accelerate this process. No more plastic, because in Japan we still use the paper book with the proof of balance. They're getting rid of them, but very slowly. So again, that 10 years of innovation in a short period of time, we're looking forward to that. So we're really focusing, first of all, on small to medium businesses, and then on individual, on sole proprietorships, so people who work for themselves, because income is really going to be the area where people feel the pain to begin with. And so I think that's where we can provide that. Fantastic.
And hopefully we'll see the death of the passbook quite soon. I can still remember those, sadly, from my younger days.
Japan has the best
so I kind of want to.
world, okay? We have the best. Like, the machine will print it for you, spits it back out, but let's get rid of them. We don't need them.
There's no way I can dispute that. So just to kind of look at the world post COVID-19, when there's a vaccine in place and the world starts to kind of function again. There was a good quote from a guy called Tom Stafford at DST, and what he said that he's been advising his portfolio company about at the moment is think about what the world will look like post-virus. Think about what business you want to be, what products you want to sell, and which customer segments you want to serve, and then work backwards to where you are today. And I know that means different things to different businesses. And so I kind of wanted to pick up on that with you, Prajit. And maybe if you could kind of share what you think the world will look like post the virus and everyone's safe and there's a vaccine and everything. And, what will it look like from your perspective?
I think, I had an interesting conversation with an economist recently. And I said, 2020 is gone. And his instant reaction to me was, if it's only 2020, consider yourself lucky, right? So I think it's going to have worldwide impacts. A lot of behavior is going to change. And this is forced behavioral change, which is very positive. Going back to what Russell was saying, no one likes to queue up, but they do it here. So a lot of habits are going to change. A lot of things, a lot of elements are going to really be, dish shelf change, etc. Cashless, as I mentioned. A lot of people have been saying, hey, we need to go cashless, but it's not really true. And those things are going to change. But from our core business perspective, do we really need to pivot or do we really need to change? The answer is no, right? Because in the end, we move billions of dollars of money. Global economy, trade, etc. will require a movement of billions of dollars of money. So I don't think at the core level we need to change any part of a business, but the behavioral changes will come in. So one behavioral change we are going through right now is that today we don't disburse cash, right? If you look at the Filipino community, cash is sent back to them. So we've been digital for 5.5 years, and now we are going through a massive change that let's do cash because that will help us get that market share which we've never played in. Of the $200, $300 transactions, and where our average ticket size is like $2,000. So I think that's the behavioral change the company is going through. And you'll see more of these, I would say, slight measured changes compared to, drastic business model change. I think if you look, all three of us, we are, Series C. We'll actually announce a series, we'll announce a funding round next week. Again, it's the important element again there is the fact that we're all late stage companies. So we are not going to be really pivoting a model like 360 degrees. What we'll be doing is slow adaptation to really mirror what the customer wants. That's the changes you're going to see between our business models.
So that's certainly interesting that new markets that were previously a bit trickier to get into could potentially start to open up now. And what are you seeing, Paul? Because obviously you have your business in Japan and in Australia as well. Are you seeing things change? Because you mentioned that things change quite slowly in Japan, but eventually they will change. What do you see in, say, 1 to 2 to 3 years?
Sure. And we're asking a lot of questions, longitudinal questions like, would you go to a football match with 50,000 other people? And right now, most people would say, I'll think about it. I mean, you can do it remotely, but it's not quite the same. So, we're looking at the things. This is sort of the Jeff Bezos, you call it Jeff's razor, I suppose, where it's like, look at what's going to change and what's not going to change in the next.
Yeah, stay the same is always good.
Yeah. A Bezos razor.
You stole my thunder.
Did I? Oh, sorry. I think I'm cribbing this from my co-founder at our leadership meeting yesterday morning. But we think that there's going to be mostly an acceleration of existing trends. We don't see completely new trends. We do believe that people will come back out of isolation, that there will be a vaccine, or that treatment will be at such a level that a vaccine won't be as necessary, and that level of fear will go down. But the things that are going to change, or that we've been waiting to change, are going to happen faster. That's digitalization. That's adaptation, as Prajit put it, and the things that will change for us, I think, is that it's an opportunity to create new relationships of trust. We're very much about trust because we have a lot of access to sensitive data. We're trusted by the banks, we're trusted by their customers, by our users. And so this is an opportunity to really fortify your trust by the actions that you take in the next 6 to 12 to 18 months. But 2 to 3 years out, that's the stuff of of crystal balls, I think. So for us, it really is a process of continual adaptation. We'll get our scenarios, our base case, our high case, our low case, and continually, but really every 3 months, see what the midterm looks like and adapt on that basis. But it's not, like Prajit said, we're not really looking for a massive pivot. We're looking for a way to bring more value, for a way to apply what we have and come out on top by putting our customers on top.
Yeah, no, that completely makes sense. And I think just to pick up on the same Jeff Bezos quote, and Russell, we clearly spoke about this yesterday. But we talked about what's going to change. What the hell's going to stay the same?
But I think this is the point, and we obviously we're getting to the end here. But yeah, look, I think Jeff Bezos, again, famous for saying people are always going to want lower prices, faster shipping. Like, it's just that these are things that are still going to be the same. So I would say same story. People are just going to want more value from the services that they use. They're going to want easier things. So this is why they're never going back to lining up, Prajit, which is great for you. Paul, if you can solve this loan application thing, you should be the king of loan moshkomi. I'm deadly serious. That's fucking on. I love that. That's great. Like, that's amazing. Like, you should totally do that. And so this is the whole point. Like, friction is called friction for a reason. And, everyone should just be out attacking these little bits of friction in daily life, because people will always want them removed. No one is ever going to say, make my life harder, make my day worse. So, we have exogenous things to do that. So we here, as thoughtful humans, should be doing things that make things smoother, better, faster, more enjoyable, and more valuable. So there.
Fantastic. I think we're coming to the end, but I can't see a clock anywhere on in terms of timing. But I was going to say that maybe, Russell, you could be King Paul's motivation officer going forward, because clearly that's what's needed in Japan right now. But I think we've got literally maybe one last question, and it's just maybe final thoughts. If we start with you, Prajit, and then we can kind of go round and close this session for the next one.
So I think in summary, I think my quick one is the fact that COVID-19 is going to alter everything as we know. Reality which we went with in December 2019 is completely altered. Everything is going to change, right? Your behavior you mentioned of going to the coffee shop, having a chit chat, with COVID-19 going to play in your mind. Do you want to have a chit chat and risk yourself? It may just go grab and go kind of a setup. A lot of things will change. And as founders, the only thing which will, I think the most important thing I want to say is that a lot of people say in GFC, Uber came out, Airbnb came out, and these became massive companies. I think companies who survive these next 2 years, you will see bigger companies than Uber and Airbnb, because GFC was nothing like this. This is possibly, the things which we think are really impacting. I'm glad this didn't happen in 2000 when people say the world is going to end. But this is really those times. So people who kind of stand strong, really deliver, those companies are going to become really massive.
Cool. Russell, final words of defiance?
No, everybody stay safe, keep building. Like, let's just make everything better. It's all good. And, I know we need to wrap. So, Paul will say bye. But no, I think it's good, guys. And it's great. And we should say thank you to the organizers for doing this. Like, it's nice to have this interaction. And I'm sure the four of us will have a chance to do this in person at some point as we return to normality, but with new behaviors. So there.
And hopefully over a beer.
Yes, indeed. That's one of the things that won't change, Pat. What's going to be the same? Beer.
Yeah, beer with friends. And Paul, last words? Or?
I guess I know there are a lot of I heard there are a lot of fellow entrepreneurs on the call, and my only advice is get through the next 3 months however you can. There are a lot more opportunities to borrow money rather than just do equity raises. So really consider that, not just at the federal level of your country, but city, state level. There are a lot of opportunities. You really got to raise the earth, scorch the earth to make sure you can continue. And once you get past this immediate period of high uncertainty, I think there'll be a lot more VCs who are now saying, yeah, we're still writing checks. They will actually be writing checks. Because most of us who've closed checks, we've been talking for 3, 4, 5 months. But now try and start up new discussions. It's like, yeah, well, let's talk to you in a little bit. So just get through this, get some debt, Interest rates historically very, very low. Make it through, and then once you're on the other side, find some ways to raise money. So that's my parting thought. Very practical.
Fantastic, and amen to that. So thanks, Prajit, thanks, Russell, and thanks, Paul.
Thanks, Pat.
Have a great day.
Cheers, guys. Thanks
Thanks.
again.
Cheers, guys.
Bye-bye.
Good to see you.